Tesla shares have slumped by more than 9% amid a fall in sales in Europe. The electric vehicle maker posted lower sales across 5 European countries, including France and the UK.
Tesla is crashing and hard. Sales in Germany have fallen by a shocking 79.2%, and the rest of Europe isn't far behind. Once the king of EV, Tesla is being pushed out by Volkswagen, BMW, and Mercedes, brands that know their market better and have built trust with their customers. Even in China, Tesla is losing ground to local competitors, and the Cybertruck, Musk's so-called game changer that looks like it's from PlayStation 1, is turning into an absolute disaster. Investors are panicking, governments are pulling support, and Elon Musk is making headlines for all the wrong reasons. The real question here is, can Tesla survive this collapse, or is this the beginning of the end?
Tesla shares opened down 15% after their worst trading day in 5 years. The stock has dropped every week since Chief Executive Elon Musk went to Washington, wiping out more than $700 billion in market value.
Tesla is facing one of its biggest challenges yet, and the numbers are hard to ignore. In Germany, Tesla sales have plummeted by a staggering 79.2%. Just a year ago, Tesla was leading the EV market there, with the Model Y topping the charts. But things have changed fast. German car buyers aren't just losing interest in Tesla, they're actively choosing competitors like Volkswagen, BMW, and Mercedes-Benz. The same automakers that Tesla once outshined are now dominating the market, leaving Musk's company in a difficult position. And it's not just Germany. The downward trend is spreading across Europe and beyond. In Britain, Tesla sales have dropped by 10%. In China, the world's largest EV market, Tesla is down by 11.5%, losing ground to aggressive local brands like BYD and NIO. Other European countries, including France, Spain, and Norway, have also seen declines in Tesla's numbers. What's happening here isn't a temporary slump, it's a full-scale market shift. European consumers are moving towards homegrown electric car brands, and it's easy to see why. Volkswagen, BMW, and Mercedes have stepped up their EV game, offering competitive prices, improved tech, and better customer service. For many, buying from a trusted local brand makes more sense than choosing an unpredictable company with constant pricing changes and a highly controversial CEO.
Across the continent just last month, 45%. That's from the European Automobile Manufacturers Association. People just choosing with their wallets to not buy Teslas because of that Musk-Trump association.
Tesla isn't just losing sales in Europe, though. It's being outplayed in every way possible. European automakers have figured out how to beat Tesla at its own game, and they're doing it better than ever. Volkswagen, Mercedes, and BMW aren't just catching up, they're pulling ahead. Their electric cars are more advanced, more affordable, and better suited for European drivers. While Tesla is still pushing the same Model Y and Model 3, these companies are rolling out fresh, innovative designs that feel new and exciting. When a buyer walks into a showroom, they see options with more luxury, better build quality, and pricing that makes sense and won't get cheese thrown at their car. It also doesn't help that Elon Musk himself is becoming a problem for the brand. In Germany, he's been vocal about supporting far-right politicians, and people are not happy about it. Yeah, his political stance is making headlines, and it's turning buyers away. In fact, Tesla showrooms and cars have even been vandalized as a reaction to his controversial views and that awkward arm gesture.
Well, Elon Musk said his Cybertrucks would be waterproof enough to float in water, but yesterday one had to be pulled out of Ventura Harbor. Take a look at this. Firefighters say somebody was trying to launch a jet ski when the vehicle slid into the water. By the time crews arrived, it was completely submerged. They had to send a diver in to hook it up to a tow truck. Nobody was hurt.
In a region where political and social values matter, having a CEO who constantly stirs up controversy is not a really good look to have. Musk promised the Cybertruck would be indestructible. He stood on stage, threw a metal ball at its windows, and acted like it was the future of the auto industry. Well, fast forward to today, and the reality is a nightmare. Not only is the Cybertruck one of the most bizarre-looking vehicles on the road, but it's also turning out to be one of the most dangerous. Reports suggest that it has an alarmingly high fatality rate, even worse than the infamous Ford Pinto, a car that burst into flames when it was rear-ended. That's not exactly a reassuring comparison. Beyond safety concerns like, is this terrorism or did the Cybertruck just explode, Tesla is struggling to even get the Cybertruck into customers' hands. Production delays, legal challenges, and last-minute design problems have caused endless setbacks. When Musk finally managed to deliver the first batch, buyers quickly noticed issues. From malfunctioning doors to concerns over its rigid stainless steel frame posing risks to pedestrians, the Cybertruck isn't the revolutionary vehicle Musk promised. It's a lawsuit waiting to happen. For a company that sells electric cars, Tesla sure doesn't make as much money from them as people think. In fact, a huge chunk of Tesla's profits don't even come from selling vehicles, it's come from selling carbon credits to other automakers. Here's the thing. Since Tesla only produces EVs, it earns these credits and sells them to companies that need to offset their emissions. It's been a really easy way to make billions without actually making more cars. But here's the problem. This gold mine's drying up. As more automakers produce their own EVs and hybrids, they won't need Tesla's credits anymore. Now that's a massive stream of revenue disappearing, and Tesla hasn't figured out a solid way to replace it yet. And then there's the whole Bitcoin mess. Back in 2021, Musk made headlines by announcing that Tesla had invested $1.5 billion in Bitcoin. At first, it looked like a smart move. Bitcoin's value shot up and Tesla made a fortune on paper. But if there's one thing about crypto, it's that it's wildly unpredictable. Yeah, when the market crashed, Tesla's Bitcoin gains vanished just as quickly as they appeared. Yeah, that gamble didn't just cost money, it made investors nervous. Betting on crypto instead of strengthening Tesla's core business wasn't exactly the best financial decision at the moment.
You've got companies like NIO, companies like Lishan, these Chinese NEV makers that are frankly as good, if not better than Tesla right now.
Tesla once had the electric vehicle market all to itself. It was the first brand people thought of when they imagined EVs, and for a long time, nobody else could catch up. That's no longer the case. Every major car manufacturer has jumped into the EV race, and Tesla's no longer the undisputed king. And the biggest threat to this? China. Companies like BYD and NIO aren't just competing with Tesla, they're outselling it. China is the world's largest EV market, and Tesla is losing ground in its own backyard. Now that is a serious warning sign for investors. Musk isn't exactly helping either. Once seen as a tech genius and visionary, he's becoming more of a liability than an asset. His constant Twitter rants, political controversies, and erratic decisions are scaring off both investors and customers. Instead of focusing on Tesla's problems, he's busy arguing online, supporting controversial politicians, and making impulsive business moves that hurt the company. There was a time when Musk's name added credibility to Tesla. Now it's dragging the brand down faster than all those Starlink satellites that keep on crashing into Earth and exploding. Tesla is facing one of its biggest challenges in history, and the numbers here don't lie. Sales are crashing across Europe, competition is fiercer than ever, and Elon Musk's reputation is hurting more than helping. The company's stock price has already taken hits, and if this trend continues, investors could start bailing out fast. The hype around Tesla has always been one of its biggest strengths, but when the numbers don't back up the hype, people start losing faith. The reality is that Tesla isn't the only EV game in town anymore. European automakers have figured out how to make competitive electric cars. Chinese brands are cheaper and just as good. Even in Tesla's home market, the US, its grip is slipping. If Tesla can't stay ahead in innovation, fix its financial problems, and rebuild trust with customers, things will go from bad to worse. And the biggest problem? Tesla isn't acting like a company in crisis. Instead of doubling down on quality, fixing pricing issues, and strengthening its core business, Musk is more focused on Twitter, AI, and making political statements. That's not how you save a company. Investors are already getting nervous, and if Tesla doesn't turn things around quickly, its dominance in the EV world could be over. This isn't just a rough patch. This could be the moment Tesla loses everything.